Hello and welcome. Is the single European currency causing major cracks in the European Union? A $1 trillion bailout package has been agreed by the EU and IMF in an effort to stop the eurozone from collapsing. But is it enough? With Greece about to default on more than $400 billion of debt, the EU has been forced to stem an economic crisis that's threatening to sweep across the continent like a virus. German taxpayers, who've had to carry much of the responsibility for the financial package, are asking why. In theory, the euro was promoted as a strong anti-inflationary currency, with members promising to keep their national debt low. Many Germans feel Greece should never have been let into the eurozone and that it lied about its financial situation to gain entry. With other euro members like Ireland, Portugal and Spain also in trouble, the value of the euro is now seriously in question. Some analysts say that it may be time to force Greece out of the eurozone, while others speculate it may be in Germany's best interest to withdraw. On today's show, we ask, how will the latest economic crisis affect European unity? Join the discussion with your questions and comments by sending an SMS or an email, or simply call into the show. And joining me now to look at the debate surrounding the euro is Josef Joffe, the publisher and editor of the German weekly Die Zeit. He currently serves as a Fellow of International Relations at the Hoover Institution and as a Professor of Political Science at Stanford University. Dr. Joffe warned against the euro and the eurozone before its creation. From London, we have Philippe Legrain, a visiting fellow at the London School of Economics European Institute. Previously, he served as a special advisor to the World Trade Organization's Director General. His latest book, Aftershock: Reshaping the World Economy After the Crisis, is out this month. Gentlemen, I welcome you to the show. And Dr. Joffe, if I could start with you there in Munich, sir. How seriously do you see the cracks forming in Europe? How much is this latest situation affecting the unity of Europe?
Well, first of all, shelling out a $1 trillion rescue package is the very opposite of cracking. It's, au contraire, it's a sign of true unity where the rest of the gang gets together to help a wayward member, namely Greece. Whether the question that we heard earlier from you is, can this destroy the euro? I just don't think so. You know, the euro is now around $120 to the euro. It used to be as low as 86 cents, and nobody talked about the euro cracking up. So we've got a long way to go before the currency cracks up.
But, you know, obviously the decisions being made for the bailouts are being done very much at a political level. It's the people of Europe, the various European countries, who will presumably face any kind of austerity measures if it comes to having to buckle up and pay for the bailouts.
Yeah, true, but what's the question here? That we have to impose fiscal discipline on the profligate? Yes. Will they be able to accept that discipline? Like Greece will have to go, you know, maybe for 5% shrinkage of GDP as a result of it? I don't think so. But the most important thing is that, let me compare this to the bailout of the rest of the world last year after the fall of the House of Lehman. We also came up with more than $1 trillion, and the most important thing was to really hit the crisis with everything we've got. And I think $1 trillion all told will stem the flood for quite a while. So I'm not at all worried that somebody or Europe will go down the drain.
All right. Well, let's bring in Philippe Legrain here. Good to have you with us as well, sir. And let me ask you how you see the European sort of union shaping up in the face of having to deal with this kind of fiscal crisis. In your opinion, does the bailout work as something that will bring Europe back up to its strength?
Well, I mean, you're going to be disappointed, because I agree with nearly everything that Dr. Joffe says, which you know, is good. It's good to see us agreeing, but probably disappointing for you who wants a sort of active debate. I mean, I think that there's a panic going on here. You see headlines in papers going about fears of the euro cracking up. And frankly, it's nonsense. As Dr. Joffe said, it's fallen to, you know, around 120. That's way above where it was in 2000, 2001, when it was at less than 90 cents. And even if the euro does fall further, that's fantastic news. Just what Germany and peripheral economies need more competitive exports in order to boost growth, and of course faster growth will help shrink deficits. So we shouldn't be worried on that basis. In terms of the rescue package itself, personally I thought this could have been resolved months ago if Greece, like any other country, had gone to the IMF. Taken IMF money, it would have been less at the time, agreed to a credible deficit reduction plan, and restructured its debts, because at the end of the day they're set to reach around 150% of GDP. That involves transferring massive sums of money to foreign creditors, but principally French and German banks at a time of austerity. And just as we were wrong to bail out the banks and let their creditors get off scot-free when they got into trouble with American mortgage debt, we've made the same mistake again now by letting them get off scot-free for making the mistakes of lending too free to Greece. So that's the real issue here. This is a financial panic. It's repeating the mistakes of the previous bailouts, and we ought to look at it, I think, in a wider context than simply the eurozone.
Dr. Yoffe, how do you see things shaping up in terms of the political impact of what's happening? People like Angela Merkel obviously find herself in a very difficult situation. There's a general sense of disgruntlement in Germany, saying, well, we have to pick up much of the bill here. How will it change the political dynamics in Europe?
But Merkel, I think, did the right thing in letting the Greeks stew a little bit in their own juice. That's why I disagree with Philip just a little bit. I think you had to let this grow, this cancer, so to speak, before the Greeks are really ready to opt for some very serious belt tightening. So I think that period was well chosen, well considered. Next point is, I think that the Germans are really quite clear, even the great unwashed, that the euro is one of the greatest advantages and boons to Germany, and Germany first and foremost. I mean, the idea that's being bandied around that the Germans should leave the euro is absolutely absurd, because what would happen is that the new German Deutschmark would go through the roof in terms of revaluation, which would destroy much of Germany's export advantage. So it's the oldest story in the book. The biggest and most powerful member of any kind of institution carries more of the burden. But I think most people here understand that the share the Germans are carrying is well worth it in terms of the overall economic interests that Germany has in the maintenance of the euro. And if the price is to carry Greece along for a while, so be it. It will become more difficult if we get near Spain and Italy. Then it's going to be really serious.
Philip Grain, I mean, even if a country wanted to leave the euro, to break away from the euro, is it an easy mechanism anyway? Is it possible really for countries to back down?
Well, I think I just first of all like to clarify that German taxpayers aren't going to pay out anything for this emergency loan to Greece. At the end of the day, Germany can borrow at much lower interest rates than the rates at which the bailouts are lending to Greece. So it's going to earn a margin on that loan. And so actually it's probably going to turn a profit on this.
If the Greeks don't default.
The second thing is. But the Greeks aren't going to default precisely because of the package, and no country has ever defaulted on an IMF loan, and you can be sure that while Greece might default on other people's on debts to other people, they're not going to default on their debts to the French and the Germans. I'd be incredibly surprised at that. Also, as Dr. Yoffe pointed out, this is hugely advantageous to Germany. Germany has had, thanks to all these bubbles in Spain, in Portugal, in Greece, they've had a booming market for their exports at stable exchange rates, and therefore Germany has been one of the principal beneficiaries of the euro. Now, so what needs to happen is we need to change that perception that somehow, you know, Germany needs to change the perception that somehow it is a victim of the euro when actually it's its biggest beneficiary.
Now, Dr. Yoffe, of course, we've got Greece very much under the spotlight right now. We saw countries like Iceland facing issues, you know, separately, but there's that not so nice acronym going around now, PIGS. That's Portugal, Ireland, Greece and Spain. And it's not exactly the most reassuring when you've got countries that may be also coming up with issues also labelled like this. What is the prospect we're going to see with problems with other countries such as Portugal, Spain and Ireland?
Pigs are very smart animals. Look, you know, Greece is somewhat of a kind of red herring in this. It's a very small economy. It has a GDP of, I don't know, a bit more, let's say $300 billion. That's nothing compared to Spain and Italy, and Portugal. Neither is Portugal a big fish in this particular churning pond. I can only look at the numbers right now. The premium that the Italians and the Spaniards have to pay for their, say, 5-year bonds are quite tolerable. They are, of course, they're higher than what Germany has to pay, but they're tolerable compared to where that perverse attack on Greek bonds, where, you know, 2-year bonds went to 14% or something. So they seem to. I mean, the danger zone here seems to be quite distant. And if you look at their debt scheduling, you know, what they have to service and to pay back this year, these are double-digit billions, low double-digit billions, which I think they can handle. So I'm not at all convinced that Greece is just the kind of the burning fuse that will light the rest of the pigs, as you call it. There are some firewalls in here, especially now that we have shelled out that $1 trillion. And by the way, may I disagree a bit with Philip? I mean, if they default, and I think Greece will eventually default on part of its loans. It's called, you know, debt rescheduling, whatever you want to call it. They're going to default. They can't pay this. So if there's a default, you know, we will pay. Everybody pays. But I think the fire will stop this side of Italy and Spain. I certainly hope so. What I don't see, and that is the biggest problem, this thing, Spain and Portugal and Italy would have to really increase their competitiveness, really change their labor markets, change the way they do business. And I just don't see Signora Berlusconi or Signora Zapatero do that. So long term, this imbalance that has been partially responsible for the crisis will persist. Okay. And by the way, the Germans will go on exporting rather than, the Germans ought to loosen their belt rather than tightening it, spending more and exporting less. But I don't think they will either. So the long-term problem will not be solved with this bailout package. Well,
I'm going to come back to both of you in just a minute, gentlemen. We've got to take a short break now. When we come back, we'll continue to look at the future of the eurozone and ask what it will take to turn the euro around as well. Right back. Welcome back. We're looking at the decline of the euro and how it may impact the future of the EU. I'm joined by Dr. Josef Yoffe, the publisher and editor of the German weekly Die Zeit, and Philippe Legrain, a visiting fellow at the London School of Economics European Institute. And Philippe Legrain, if I can come back to you with a question we had from a viewer that was sent by email. It came in from Soufiane Boukir, who wrote in saying every country in the EU should be responsible for itself. Unless this mentality changes, there will only be more problems. Any comment on that?
Well, I mean, I think that every country needs to be to keep its own house in order, and every country needs to have, you know, a responsible a fiscal policy. But also, every country throughout the world that falls into trouble needs to call on some assistance, and generally it's the IMF, and that's what I think that Greece should have turned to. But looking at this, as I said, looking at this in a eurozone perspective is really kind of missing the bigger picture. Remember, this sovereign debt crisis, the first victim of it was Dubai. And then after Dubai, people started thinking, okay, well, if Dubai goes wrong, who else would go wrong? And then it turned out the Greeks were cooking their books, and so it turned to Greece. And then traders in New York, who've probably never been to Europe, thought, oh, look, if you stick all these letters together, it makes pigs. And suddenly people started looking at Spain. Spain has a lower debt-to-GDP ratio than Germany. There is no prospect whatsoever of Germany going, of Spain going bust. And it's just been lumped together with Portugal because they're both in the euro, they're all Mediterranean, and it goes into a nice word called pigs. You know, the next victim could be Britain, nothing to do with the eurozone, and one day it might even be America. So I think the perspective that the media is taking on this, I think, is a complete distortion of reality.
You raise an interesting point there, which I want to put an email to you, Dr. Ioffe, that came in from Luciana de Floriano in Italy, who wrote in saying, which role do rating agencies play in the current crisis? It seems that by publishing their reports on high-risk countries, they have caused the fall of international markets. Your opinion on that, sir?
Well, I wish they would have done what they did a bit earlier, and I wish that those much maligned hedge funds who are selling countries short would have started selling short Greece a bit earlier, because then we would have known what was going to hit us. So my problem with them is they didn't respond quickly enough and didn't warn us early enough. I don't think that you can blame either the short sellers or the rating agencies for the problem we are facing now. It's like blaming the messenger for the lost war or the crisis. I would go a bit easier than I would. I would be harder on them for not reporting the problems earlier than they did.
Philip Green, the issue of confidence, of course, is a big thing. As you say, people get an idea into their head, and the media certainly can, help propel that idea, irrespective of any underlying facts and figures. But let me ask you to answer an email that came from Dagu David, who wrote in saying, as the latest crisis reveals the vulnerability of the euro, new potential member states could be more skeptical about joining the eurozone.
Well, Estonia clearly doesn't, because they've put in their application to join. It looks most likely that they are going to join in January 2011. I think the point, though, about the financial markets and credit agencies is very important. During the long boom, investors forgot about risk, and they gambled vast amounts, not only on investments related to American mortgages, which caused the first half of the crisis, but also to governments. And in a sense, it took two to tango. The Greeks borrowed too much, but also investors weren't careful enough and assumed that lending to the Greeks was as safe as lending to the Germans. And the credit rating agencies played a role in this. They vouched that lending American subprime mortgages were safe, and they vouched that Greek debt was safe. And now all of a sudden, the opposite thing's happening. The investors who are blind to risk are suddenly panicking, and the rating agencies who didn't sound the alarm about the mortgages, who didn't sound the alarm about Greek debt, are suddenly now going in the opposite direction. And so they said, oh, well, we'll downrate Spain, we'll downgrade Portugal, and whoever's next, because like that will show we've learnt our lesson. Frankly, I think we should just be ignoring the ratings agencies. They have they have conflicted interests, and frankly, they haven't been very good on the way up, and they're not any good on the way down either.
Okay, we've got a call from the UK. Shaukat is on the line. Shaukat, what would you like to ask?
Yeah, hello, assalamu alaikum.
Alaikum salam, how are you?
Yeah, fine, thank you. I'd like to ask a question. If the worst comes to worst and eurozone keeps declining, then do you think one of the answers would be for eurozone to go to the Middle East and encourage the Arab countries to trade with oil in euro rather than dollar? Thank you.
Okay, that actually, Dr. Ioffe, could I put that to you, sir? That I don't know if you heard that clearly, but Shaukat was asking if perhaps the euro could be a trading currency for the dollar.
I mean, that's a fascinating little trick. Denominate this in euros, but in that case, obviously, if there were suddenly a surging demand for euros, the euro will rise. But that's like playing with matches and the thermometer. It doesn't really tell us anything about the real temperatures. So while the euro may surge a little bit, it won't overcome the deeper the underlying problems we have had. But and secondly, I don't think the dollar is rising because of oil prices. it's right now it and the Swiss franc, and maybe, I don't know, maybe the Russian ruble are the only safe currencies around, and that also explains in part, maybe in large part, the rise of the dollar. But I want to stress one more thing.
Mm-hmm.
We are watching, I think both of us here are in agreement on that. We are watching the ups and downs of a currency market which is freely floating. And again, the Europe has floated between 86 cents and 149, and we are now not even halfway at the bottom. So let's not confuse the currency movement with the crisis of Europe and the euro currency.
Dr. Yoffe, a quick thought. With Germany, there's been certainly Germany's been reluctant for any kind of inflation to be allowed in Europe. Do you think some people feel that maybe there's time for a little breathing space and for allowing a little inflation?
I don't think that inflation ever helps anything. I mean, that's how countries like Spain and the pigs, if you wish, minus Ireland, have done business prior to the euro. They have devalued just a little faster than they had inflated, and thus kept an export edge. Having gotten into Europe, they couldn't play that devaluation game anymore, and so the chickens, their fiscal chickens, so to speak, have come home to roost. So I don't know what inflation will do for us, except that it will obfuscate the underlying economic issues. But your question really is also raises another point. How do you change an economic culture of countries? How do you make the Italians be less profligate? How do you make the Spaniards, who have a 20% unemployment rate, do the appropriate microeconomic reforms of their markets under a left-wing government? Very hard. And how do we get the Germans, who have experienced this hyperinflation in the 20s, and again a currency disappearance after the Nazis, and who are now so wedded to fiscal discipline, how do you get these people to save less and spend more? Very difficult. How do you make the Chinese spend more and save less, or the Japanese?
Unfortunately,
so we're talking political culture, difficult to change.
Unfortunately, we run out of time, though. I want to
Yes.
thank you, gentlemen, both for a very interesting conversation there. I hope to get you both back on. Thank you, gentlemen.
Thank you.
Bye-bye.
And thank you for being with us. Now remember, you can follow our program on Twitter. We'll keep you notified on upcoming shows, and you can tweet us your questions and comments to pose to our guests. On the next show, what role does Hamas see itself playing in the future for Palestinians? And is the international community moving closer to accepting the Islamic Party as a fact of life in the Palestinian territories? We'll speak with one of Hamas's top leaders, Dr. Musa Abu Marzouk. Be sure to tune in for that from me and the team. Until then, see you next time.